Hey folks, David here. So you may remember some months back I suggested that there may be a place in a modern long-term investing portfolio for some copy trading on Etoro. Essentially, it's like a managed portfolio where you're copying the investments and trades of individuals who operate on that platform. Anyway, off the back of that video, I set up my virtual portfolio and picked fairly randomly 8 investors to copy, along with a fairly fresh looking crypto portfolio. Now, 6 or 7 months later, I want to take a look back and see how that would have performed compared to if I had just taken all that money I virtually invested and stuffed it into a global index tracker. Just before we get right into this though, I do want to say 2 things. One is that this video is not sponsored. All views are my own, and as always, what follows are just observations and of course never financial advice. Secondly, I just want to mention how copy trading works for anybody who doesn't quite know. So we hit the Etoro website here, and from there we go to the homepage. From the homepage you can go to Discover, then Copy Traders, and then browse all sorts of traders and investors, filtering them down by various different criteria. Once you've found the one you want to copy, you simply click Copy, and from here you are asked how much you want to invest. There is a minimum investment and it varies from subject to subject, but it's typically around $1,000. From here, pretty much every action the trader you are copying makes is copied as a percentage amount on your own portfolio. So if an investor puts 10% into Tesla, then so do you. You can still override these investments, but then what would be the point in copying if you did that too many times? You might as well do your own thing. This investment made by you is caveated by the fact an investor could add more funds and skew the percentage a little bit, and if you don't follow suit and add a similar amount of funds, then the numbers will start to get a little weird, but in the main, take it that what they do will be reflected in your own portfolio. And also one final weirdness before I get into the numbers of how these last 6 months have performed, which at the time of recording I haven't seen, so this will be a bit of a reveal to myself as well. At the time of my last eToro video, when I was featuring the copy trading world, one of the most popular guys on the platform, J Nemesis, reached out to me on this very channel and informed me of the following. He says, "Hey David, currently the virtual portfolio is not a reliable method of testing copy trading. It works great for testing your own trades, but for copying, it regularly fails to open new trades or close old ones at the same time as a copied investor." So that was pretty interesting to me and quite surprising to find that out. I knew from researching a previous video that trades under $1 wouldn't be executed on the platform if you're copy trading, although I was informed by eToro themselves that the virtual copy experience was exactly as if you were copy trading with real money. But judging by the comments of one of their top copied traders and a guy who has been invested in the platform for an awful long time, it seems it might not be the case, so bear that in mind as we go through this video. Let's go. So on the 14th of April, when I started looking at investors and copy trading them, the VWRL value was at about £83.38, and now on the 11th of November it sits at £92.09, which represents about a 9.27% increase. That's a pretty solid return for buying an all-world index on the 14th of April and literally doing nothing else. Sit in your hands and earn over 9%. Okay, granted, we have been seeing a bit of a bull run for the last while, and it's easy to see how a world tracker would be rising. So let's now see how these investors that I've been copying have fared against that. And at a first glance, it's a bit of a mixed bag. The highest there is, of course, the crypto portfolio. As you can see, crypto is a hugely volatile thing to be putting your money into. And in this past 6 months, crypto portfolio would have returned over double those of the VWRL, clocking in at around 20%. Kenneth Bardales is next there, and I apologise if I have just butchered your name. He is beating the rate by about 3% or so. One girl not too far off the rate there at 8.69%, and the rest around breaking even or a few percent in reverse in the worst cases. It's not a bad spread of results, and I suppose that's kind of what I expected. Considering the aforementioned caveat that not all trades are being executed in a virtual portfolio, it's hard to know exactly where these copy positions would be. But since those unexecuted trades could be winners or losers, it's probably fair for the purposes of this video not to worry about them too much. So what does that prove? Well, to be honest, not a lot. 6 months is nothing for a long-term investor. Depending on what 6 months you look at over the last few years, you're probably going to see a very different chart. I didn't set out with any agenda for this video to endorse or disparage any particular investor for 6 months worth of returns. It just happens to be this particular time period for me since I first looked at eToro's copy features, well, 6 months ago. In that time though, the global economy has been doing pretty well. It continues to be led by the US, which makes up a fair chunk of the VWRL ETF, and that particular part of the world has been doing admirably of late. I like using VWRL as a base for all these sorts of comparisons because it's a pretty good representation of the global economy or the global market. But how about comparing these investors' results with something like VFEM, which is Vanguard's Emerging Markets ETF? In the same time period of the 14th of April to the 24th of October, VFEM has actually decreased by about 0.03%, going from about £51.35 to £51.33. It's behind, a tiny amount in the red, but a fair way behind my global benchmark. So if for whatever reason VFEM was your go-to investment, then all of a sudden these portfolios are at least comparable. So it's fair that I should go back and mention a little bit about how I selected these guys for copy trading. As a long-term investor, I wanted investors with a somewhat long approach, with a sufficiently low risk and whose ideas of a good investment aligned somewhat with mine. It's a little bit like choosing a fund manager, except fund managers in a bricks and mortar world might be tied to particular rules or particular markets. The investors you can copy on Etoro aren't tied by anything except their obligations to Etoro. So I did have a few rules for myself when picking some people to copy for my virtual portfolio. Take for example James Beale. I would say that this is pretty much how I feel in terms of his timeline, where he is thinking about 5 to 10 years from now, and I like his thoughts on trying to pick sectors with growth. If I was trying to make some investments outside of the main indices of the world, this is probably something I would go for. But as we know, for whatever reason, his returns haven't been quite as good. Most likely, his picks just haven't performed as he'd hoped, but who knows, they might improve at any time. Another factor why returns could be diminished by trading is that you're always fighting against the spread every time you trade. And over time, that's going to eat into your profits. Every time you take up a position or sell out of position in the stock market, you lose a little bit of money because of this spread. This spread, for anybody that doesn't know, is the difference between the buy and the sell price. So for example, let's take a look at Tesla on Etoro. At the time of preparing this video, the buy price is 106.948 and the sell price is 106.707. The difference of the spread here is 0.22%. What that basically means is if you bought some Tesla and immediately sold out of your whole position, then before any price movements, you would actually lose 0.22% of your money. Too many trades and this 0.22% might begin to make a sizable difference to your profitability, since every time you trade you have to pay this price. Trading crypto on Etoro is a little higher. Take a look at this chart. Trading Bitcoin, for example, you would need to surpass 0.75% before you make any profit due to the spread. Crypto is wild, it's unregulated, and it's subject to market manipulation by big voices in the space, whether those voices mean to impact the market or not. And seeing the swings we have, 0.75% might not seem like much, but again, this is every time you trade, so those costs are soon going to add up. Other crypto spreads are even tougher. All the rest of them are approaching 2%, and MIOTA going as high as 4.5%. The point I'm making here is that the investors and traders on Etoro are having to absorb these costs every time they trade. I'm not saying they can't beat them long term, I just think it's incredibly tough to do. Perhaps in flat conditions or worse in bear markets, where traders could take up short positions, then these traders might be in an even better position to be able to beat the market, since index trackers, the sort of things I invest in, will inevitably track downwards. One of the things about copy trading is that Etoro offers an opportunity to bet against stocks, or shorting stocks. Traders can take up short positions and try to make profit when companies go into reverse, whereas long-term buy and hold investors like myself will just have to suck it up and try to stay consistent. But the most dramatic action we can do is sell and maybe even wait, perhaps to get back into the market. But unless you want to get into trading CFDs, you can't really go the other way and bet on a company to flounder. Etoro and copy trading offer a route into that, but if that's your thing, please proceed with caution. For what it's worth, I'm definitely in the long-term buy and hold camp. I have a ton of videos where I talk about what I invest in and why, but it has been fun trying some trading and copy trading with the virtual portfolio, but I'm not yet convinced enough to try it with my own money. I suspect I might well do at some stage in the future, even just to create ropey content for this channel and scratch that curiosity itch. Of course, not all investments can be right all the time, so as I said in my initial look at the Etoro copy trading features, you might find some room for this interesting take on investing in your portfolio. If nothing else, it's more diversity in terms of where you're investing and in what markets. Our friends over at IQ Investing created a video recently about whether or not bonds still have a place in a modern portfolio, and it's a little bit like that. You can make room for something different if it aligns with your goals. I'll link to that video if you fancy checking it out after this one. If you are interested in taking a look at Etoro for whatever reason, there is a link in the description, and if you sign up there, I might well get a little kickback. So it's a good way to support the channel if you've found any of this interesting or worthwhile in any way, shape or form. If you are interested in more Etoro content, I have a couple of videos here. Thanks very much for watching, and I will see you in the next one. The point I'm making here is that the investors and traders on Etoro are having to absorb my dog doesn't approve. All right, Flitzy.